News Talk 94.5, WPTI, 96.7 FM, WTOB. You're listening to the Wealth Guardian Show with Doug Ray, helping you retire the job and keep the paycheck. I'm your host this week, Brice Payne. With me is not Doug Ray, but Garrett Ray. And this morning, we are dipping into the mailbag, both segments, first and second, to see what our listener questions are and how we can help them and perhaps in the process, you learn how to retire the job and keep the paycheck. Garrett, how are we doing today?
Doing all right, Brice. And in full disclosure to our audience, we are recording this before Thanksgiving, but this particular episode will air after. So, Brice, how do you think your Thanksgiving is going to go?
I think my Thanksgiving went very well. I think Mom came over with our neighbors, and we had the turkey and everything. I watched football more than they did. And I think Dallas won, Detroit lost, and the toy schnauzer won the Westminster. That's my guess. We'll see if I'm right on that. And what about you? What did you and the Ray family do?
Isn't that always the way? I always get comments from my fiance every time Thursday through Sunday rolls around. She's like, football again?
I love it.
But I know. I do
darn
too.
Tootin' football again.
That's right. I think your predictions are good. It's a safe bet to say that Detroit's going to lose. The Cowboys will win. Not so sure about the toy schnauzer. I never thought that was a particularly attractive
animal. What breed do
you
you think is going to win, honestly?
I've always been a fan of like the English Bulldog.
Okay.
I really like that dog.
Okay.
That's the one that kind of is close to mine.
We'll see who's closer. We'll see who's closer.
Absolutely.
All right, very good. Now, before we dip into the mailbag here, Garrett, let's go ahead and do our Wealth Guardian service salute. This is a really tough time of year to be away from your family if you've put on the uniform and you're serving somewhere. Mm-hmm. So we really, this time of year and through Christmas, we want to really do that service salute right. So if you're out there and you are not with your family, then you are really with the minds and hearts of us here at the Wealth Guardians. And to your family as well, thank you for your service. Thank you for your sacrifice. I know everyone just wants to be around their family this time of year, Garrett.
Yep.
You had to spend a couple of years away from your family. Your dad did as well.
Yep.
And it's not easy. You were in the Navy. Your dad was in the Navy. So thank you. And thank everyone else out there for putting on the uniform and helping the old Stars and Stripes out there.
It is. The one thing I would say is that it's, you're thankful for the human spirit during the holidays, because it's amazing to see those servicemen and women, their families will rally around them. Typically the spouses or the loved ones who are at home while their service member is away. And it's a powerful thing to see. So
it is. I was actually at an airport one time when some men and women in uniform were coming through. This was about 6 or 7 years ago. And it wasn't me who started it, but somebody did stand up and start applauding, and other people stood up and started applauding. And it was just a chain. It was tear-jerking.
Yep,
I mean, it was not just for the people who had the uniforms on. They were definitely in tears, but so were the other people around us. It was... all other differences go aside in times like that, and it's great to see. All right, Garrett, let's go ahead and dip into the mailbag. What do we have first?
All right. Alan has an interesting one for us. Alan in Winston-Salem has this question. He says, Brice, I have 2 rental properties, and both have a mortgage on them. I have enough money in investments that I could pay off both properties, but I'm getting enough in rent to cover the mortgages. So do I even need to pay them off?
Okay. Well, Alan, appreciate the question. And this is a question that we here at the Wealth Guardians, Doug, Garrett, and myself, get frequently. And this is one of the more common questions that people tend to get wrong. It's going to come down to 2 factors: the interest rate that you're paying and what you think you could reasonably make on your money if you invested it and not paid it off early. If the interest rate amount is lower than what you think you could get, say that your interest rate is 3%, and you think you can reasonably get 5% on an average annual return of your investments, then it wouldn't make sense for you to pay that off early. In addition to that, Alan, you should be able to claim write off the part of that mortgage payment every year. So keep that in mind as well. Now, if you've got a higher mortgage rates have been going up. If you've got a higher mortgage rate, like some of the new ones out there are 7-8%, then you very well might want to try to pay that off early if you can, but don't put yourself in a financial bind to do that. But it's a great question, Alan, and everyone else out there, it's that simple of an answer. Before we go to the next one, if you are just tuning in, you're listening to the Wealth Guardians, and we're dipping into the mailbag this week, Garrett and myself, in Doug's absence. And so that was Alan's question in Winston-Salem, and let's go ahead and move on to the next one. Garrett, what do we have?
All right. Mary in Burlington has a question that I believe is going to be more and more commonplace. She says the following. I had kids later in life than most people, so I'm almost 60, and my twin boys will be heading to college in a few months. I really want them to be able to finish college without any huge student loans, but I'm not sure that I can pay for both of them to get through school without hurting myself financially. I'd like to retire eventually after all. What should I place a higher priority on, their education or my own retirement?
All right. Well, Mary, this is like Alan's question. This is a common question, and it's one that we sometimes see people getting wrong. Your kids have an option here of either being in charge of their own student loans, or perhaps being in charge of funding you through your retirement. If you're putting yourself in a financial bind to get them out of debt, then they're going to be responsible in turn for your debt, because no child, what choice do they have? If you don't have money for your retirement, are the kids just supposed to let you be out on the street? No, they're going to step in and help you out. And any child, as much as we want to help them, we don't want them to be in debt. I get that. I get where you're coming from for that. But any child would rather ultimately in the end be responsible for their own student loans than being responsible for their parents' retirement. It's that simple. So if you're not putting yourself in harm's way by funding some of their student loans, then by all means do it. But if you are, then don't. Let them be in charge of it. That might be the little inspiration they need to get out there and be in the workforce full force. Sometimes you just got to cut the rope.
I agree, Brice. And any young adult who has made that choice to go to college, they're getting that first kind of sense of freedom. They're stepping out into the world kind of on their own for the first time. They know that part of that responsibility is that cost of college and funding their own education. And most, I would say, are very motivated to do so. They want to land that first good job. There's a sense of pride in kind of paying off what you work so hard for. So
right.
I absolutely agree with you there.
Very good. All right. Well, if those questions, if Alan's and Mary's questions are anything along the lines of what you have, and you think, maybe I really do want to sit down with a financial planner because I've got additional questions on top of those, as we do every week, we've got good news for you. We here at the Wealth Guardians offer a no-cost, no-obligation second opinion/review of your current portfolio to see how we can help you lower your fees, lower your risk, or get your risk in line with your risk tolerance. We can help you analyze your risk tolerance so you can see what kind of risk you're taking with your current portfolio versus the risk that you feel is acceptable for you. We can help you plan out your future through retirement, when to file for Social Security, if you're going to have any kind of rental income. How does that factor in when you file for Social Security? There's a lot of questions out there we can help you answer. There's no cost or no obligation for it, but you do got to pick up the phone and give us a call. And that's as easy as dialing these numbers in this sequence: 336-391-3409. 336-391-3409. If you're not a big fan of that phone thing and you'd rather go online, we got you covered there as well. It's thewealthguardians.com. And you can sign up to sit down with Garrett, Doug, and myself and see how we can help you better align your portfolio to meet your goals and objectives in retirement.
Absolutely.
Right.
We'd love to have a conversation.
We do. We do it all the time. Garrett, what do we got next?
All right. Dana writes us, and she has a decision to make. She says,
Does she?
Yeah, she does. She says, unfortunately, my husband and I are getting divorced, and we are deciding on how to split up our assets. He will owe me about $200,000. I could take that from his 401k or just take that amount from cash in our money market account. Which one of those should I choose? So,
Dana, we're sorry to hear about the divorce. We do have some clients who go through that, and that's never an easy process. That's a great question, and I'm glad that you're thinking along the right lines here. But it's a complicated question. While the earlier questions in this segment were easier, this is a more complex question. So while I can't answer it, I'm going to tell you what I would need to know in order to answer it. So here's what we need to know. Your age. You didn't tell us how old you are. That's going to tell us how many years until you want to retire, perhaps. Your income annually now. How much longer you plan to work. Your monthly Social Security amount. Other forms of income in retirement that you might have. And what assets you already have, and in what types of accounts are they? Are they already IRAs? Are they Roths? Are they non-qualified accounts? Once we know all of those little bits, then we can start computating an answer for you. And it's a great question that you have, because one could seriously make a lot more difference for you in retirement than the other. So you do want to get that right. It's not just something I can say, oh, yeah, you definitely want IRA money. That's all there is to it. No, it's not that easy. Very good. I think, Garrett, it's about time for us to go to our break. But before we do that, we've always got our trivia question. Now, I love asking Garrett the trivia questions because Doug sometimes just says, Brice, I have no idea. But Garrett applies his deductive reasoning that he got from the Citadel and from Wake Forest, and he's able to figure these questions out. So, Garrett, here we go. You're going to have to apply your deductive reasoning to this one. Are you ready?
I'm ready. Bring it here.
Very simple question. Black Friday is the biggest and busiest day of the year for what trade profession? We're going to leave it at that, and we will catch you on the other side of the break. This is Brice Payne. With me is Garrett Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB. News Talk 94.5 WPTI. 96.7 FM WTOB. You're listening to the Wealth Guardians Show with Doug Ray, helping you retire the job and keep the paycheck. I'm Brice Payne, along with not Doug Ray this week, but Garrett Ray. And in the second segment this morning, we are dipping into the mailbag once again. Now, before we get to our trivia question, we're going to see if we stumped Garrett there. I've got two questions for you. Are you looking forward to your retirement? Okay. Do you want to make sure that you're making the best decisions for your retirement? Well, if you answered yes to those two questions, then I've got great news for you. We here at the Wealth Guardians offer a no-cost, no-obligation second opinion/review of your retirement plan, your assets, your insurance policies, your portfolio, your income needs, everything that you want to talk about financially. We can help you out with that. But you got to pick up the phone and give us a call. 336-391-3409. That's 336-391-3409. You can also visit us at thewealthguardians.com. Let us show you how we can help you retire the job and keep the paycheck. All right, Garrett.
All righty.
Let's get to that trivia question.
Okay.
Black Friday is the biggest, busiest day of the year for what trade profession?
Okay. I have an answer, but I'm afraid you might get me on a technicality here because I'm not sure what I'm thinking of as an actual trade.
It's not a trick question.
Okay. My process was just, I know that the fourth quarter in particular, like November and December, are the strongest months for the retail sector.
Okay.
So I was going to say that's the most active, or it was designed, Black Friday was basically invented to bring people out to the retail stores. So that's my answer.
That's your answer. Okay. Well, I hate to tell you this, Garrett, but now we stumped him. Now, it is probably true that that's not a trade, but it is the busiest day of the year for them. They call it Black Friday because they finally, everything that they make after Thanksgiving is profit for the company. That's why they call it Black Friday. It's actually the plumbers.
The plumbers?
Think about it.
What in the world?
We'll just leave it at that. Black Friday is the busiest day for plumbers.
It just got it.
There we go. All right. It just hit Garrett. All right. Very good. Well, we're going to dip into the mailbag here now. And we have some leftover questions from the first segment. And let's go ahead and get to this. Who do we have next, Garrett?
Yeah, let's get into the second half here. All right. So we got a question, a good one from Sherry from Lexington. It looks like Sherry was trying to time the market a little bit. She writes, I almost got out of the market before it dropped down recently. Now I'm back to where I was before. Should I get out now?
So that's simple. Okay. Well, Sherry, thank you for the question. You are not alone in what you almost did or didn't do. Right. I will say, I'll be right up front with you. We here at the Wealth Guardians, we don't have a crystal ball. And that question is asking me, is the market still going to go down? Now, I can tell you what we believe, but I'm not going to give out financial advice on just a belief like this. So, yeah, we do believe that the market is going to continue to go down for a couple of more months. We might be wrong on that, but don't base your investment decisions off of that. I've got a question for you then, Sherry.
Right.
Well, before I ask you your question, Sherry, generally we don't encourage market timing. Unless you really have ample experience at it. More often than not, somebody who tries to time the market is not doing it right, and that's actually a real skill that it takes. But the question I have for you is, where has your financial advisor been in helping you make the decisions on how much risk you're okay taking, how much losses you can afford taking, and getting you in the proper investment so that your risk is in line with your risk tolerance? If
That's right.
you're concerned about the market keep going down, I'm hoping that well, I don't know if I'm hoping this or not. Do you have a financial advisor? If you do, then you need to sit down with him pretty quick and have this discussion about risk versus risk tolerance and how much losses you can afford to take. If you don't have one, well, if I say this in a polite way, that's on you. You need to get one.
Yeah.
Just like you need to go in for a physical every once in a while, you need to go in for a financial physical with a financial planner as well. So, Sherry, we would be happy to sit down with you. As you know, we've said that many times on here, 336-391-3409. I'm not going to be able to tell you whether or not you get back into the market today or get out of the market today. The second question would be well, when do you get back in? And again, that comes to market timing, and we don't try to do that here. We just want to get you in the right investments that can weather a storm like this based on your risk tolerance and your time horizon of when you need your money.
I was just about to say that, the only other comment I was going to have to share is, right now with this question, Brice and I don't know your time horizon. If you've got 20, 30 years left, okay, Sherry, you can just, stay and kind of maybe ride this down wave in the market. If you are going to need those monies in the next 2 to 3 years, well, you may not recover all the way. And so that's why you got to come in and stop by and give us a shout.
Very good. All right. Thanks for the question, Sherry. We do appreciate it. And what do we got next, Garrett?
All right. Next one is a fairly long one, Brice, so buckle up.
All right.
Lenny in Mount Airy has this question.
Oh, Mount Airy. It's always the Mount Airy people that have the long questions.
Exactly.
Hi, Lenny.
He says, I'm embarrassed to ask this question because I know there are people who have actual problems with money that would love to be as fortunate as I've been. But I'm wondering, what do you do once you're in your 70s and realize you have more money than you'll ever be able to spend? I have 3 kids, and I guess they'll probably just inherit all of it. But in a weird way, I'm almost sad that I didn't enjoy life a little bit more along the way, instead of working so hard to save up all this money that I can never use myself.
Very good question, Lenny. I'm glad that you have that problem as opposed to other types of problems that some people have. So you're right. At least you recognize that you're fortunate. Lenny, I was just kidding about the Mount Airy joke there. We get long, complicated questions from people all around. So here's what I would suggest without knowing more than what you've already provided me. I would want you to focus on tax mitigation strategies at this stage then, because that money, as you said, is very likely going to go to your children. Well, when they inherit that, you can structure the accounts in a way that they are inheriting a lesser tax obligation than a greater one. It takes some time to get the accounts straightened out and get them structured properly. There's going to be some estate planning, perhaps some trusts in there. There's going to be IRA to Roth conversions in there. But that would seem to me to be one of your 2 main focuses. Your other one would be, if you don't already have this taken care of, you will want to consider long-term care coverage.
Yep,
because
absolutely.
That money very well might be needed for that. And if you don't have insurance, that can wipe out, particularly if you're in a long-term care facility for a longer period of time. Perhaps it's for cognitive reasons as opposed to physical reasons. You can be in there for years, and boom, there goes the kid's inheritance. So if you want them to inherit something, you can invest in a asset-based long-term care policy for yourself. And one, the kids aren't obligated to helping you out because you've already got it taken care of. So you've done them a favor as much as you've done yourself a favor. So that's the way I'd have you think about things. You can also consider tax-free gifting. The tax-free annual gift per person right now is $16,000 a year. So you could give each of your kids that amount every year. And a lot of our clients do that, Garrett. And instead of just having them inherit it when they're gone, they like to see them enjoy it and go on those vacations perhaps with them, or just see their kids getting along better, getting that bigger house slightly or whatnot. So if you're pretty confident you don't need the money, that's 2 ways to start a way of thinking for you. Lenny, thank you for the question.
Yeah, absolutely. And 2 other things to add there. Lenny, I don't know if you're married, but if you are, then you can have a gift in $16,000, and also your spouse can, so you can have a little bit extra room there as well. And then the other thing, just to kind of reemphasize the point, Brice, on the long-term care, you mentioned you're in your 70s. We start to see folks when they get into their late 70s, get certainly into their 80s, the possibility of having to have some sort of assistance with long-term care grows and grows. So definitely consider a long-term care policy if you haven't.
And you'd want to get that sooner than later,
Yes,
by all means.
absolutely.
The older you get, the less benefit your investment will get you in that.
Absolutely.
Thanks again, Lenny. What do we got next, Garrett?
All right. The next one we have is from, let's see here. We've got Charlotte in Charlotte.
Ha! Charlotte and Charlotte. Okay.
She says, I'm 60 and I'd love to retire, and I think I probably could, but it seems like everyone I know waits until they're 65 or 66. Why is that, and is it a bad idea to retire now?
Well, no, it's not a bad idea to retire now. Thank you, Charlotte, for the question. I guess I'd want to know, how much do you enjoy your job? Are you liking getting up and going to work? Is it physically demanding on you? Is it mentally taxing on you? You're in a great position if you feel you don't have to work, but ask yourself, what are you going to do with your time? Let's plan that out. What does your days look like? What do your weeks look like? What do your months look like in and out? Are you able to go back to work? If you hang it up now and decide after a year, it's like, oh, I really miss doing my job. Are you able to go back? Because if you can, then yeah, take a shot at retirement and see how you like it. Now, I'm not saying you can financially. You told us that answer that you can, so I haven't analyzed that yet. But I've got a friend. It was a ER doctor. I served in the Peace Corps with him, Dr. Warrington, and he did pretty well for himself investment-wise and income-wise, and he's only 51 years old right now, and he retired. And he's got a 44-foot boat that he is right now taking from French Polynesia. Next stop is New Zealand, and he's been going all over the place. Being an ER doctor was stressful for him.
Absolutely.
But if you like your job, then ask yourself, why are you wanting to retire? Don't retire just because that's what people do.
Yep.
All right.
And the only other thing I would add there, Brice, is, she may have that kind of 65, age 66 range kind of stuck in her mind, because that's like kind of the age where you start to become full retirement benefit for Social Security.
Medicare.
Yeah, Medicare as well. A lot of people kind of pair the two together. That when they have to go on Medicare, that's when I retire. That's not necessarily the case.
Good point.
There's plenty of ways to do that, where you can retire the job and then still live off your investments through distributions, before we have to get to the Medicare step, and we have to get to how you're going to file for Social Security. So
right.
All that's in the equation.
Very good. But Charlotte, I'm glad that you've decided that you can retire if you want to. That's great. I just can't help you with the "do you want to" question.
That's right.
All right, what do we got next, Garrett?
All right, Wendy in Walnut Cove.
All right, Wendy in Walnut Cove, and this is probably going to be our last one.
All right, she says, our 401k plan at work now has a Roth option available for future contributions. Should I take advantage of this?
All right, well, Wendy, it's a great question. Again, more and more 401ks are offering the Roth option, and a lot of people aren't even aware of that, and that leads them to the question when they find out, well, what should I do? The quick answer is it depends. So I'm going to tell you, Wendy, just like I did with another listener who asked a question, I'm going to tell you the information that I would need to know in order to answer that question. Here's what we would need to know. How many more years until you need to draw down on your 401k/Roth? What tax bracket are you in now? What tax bracket will you be in after you retire? And what will you have any gap years? And when we say gap years, that is the years in between your retirement and when you file for Social Security. Once we know that information, that will tell us the answer to your question on whether you should be investing right now into your traditional IRA or your Roth, your traditional 401k or your Roth 401k. Yeah. So that's it. And Garrett, I think that's it for this weekend.
Yep, we ran out of time.
We ran out of time again, so I'm going to go get some more turkey and stuffing and just fill myself up, and we got some more football to watch.
Absolutely.
That's all the time we have this week. Thank you for joining us. We hope the rest of your weekend is everything you want it to be. This is Brice Payne. With me is Garrett Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB.